I'll wrap it up there and just say, again, we painted a credible case for Goldilocks, inflation, deflation. I suspect either our quantitative risk management summary will resolve that debate over the next few weeks for you, hopefully. And then if not, then I suspect that the catalyst as big as the Q4 quarterly refunding announcement at the end of July, and obviously the Fed, those catalysts can be big enough to cause asset markets to really make a bold pivot, and will obviously be the second person in that trade, as opposed to, again, being the first person in a trade that ultimately never starts. That's how you get fired if you're a buy-side investor. So just be aware of that. So we'll wrap it up there. Darius Dell presenting our macro, or not a macro minute, our around the horn for Saturday, July 6th, 2024. And actually, before we wrap it up, let me just remind, let me talk you guys through this slide here. And you guys have seen this slide already from us. So just a reminder, this is what we're trying, we're trying to avoid this, which is responding to failed predictions. We're trying to avoid printing out a MapQuest of exactly how the markets and the economy are going to evolve, and build a tremendous amount of conviction and elevated position sizing associated with predictions that ultimately failed to come true. Because for the reason we don't do that is because it takes longer to figure out that your fundamental predictions have gone wrong. It takes longer because data gets reported on a lag. It takes longer because ultimately you have this narrative crafted in your head, and you have a lot of emotional baggage associated with that narrative that takes you longer to realize that it's wrong. And so this is what we're trying to avoid. And we're not saying that you can't do that. Do whatever the hell you want to do as an investor. You guys are grown men and women. What we're trying to, the reason you're paying 42 macro is because 42 macro is orthogonal to what you're already doing. If you're already doing this, that's fine. You can make a ton of money having a tremendous amount of conviction on the destination. You can make a ton of money having a tremendous amount of conviction on the destination. However, what we do is not have a tremendous amount of conviction on the destination. We're just responding to the turns that Google's telling us to turn. We're responding to the turns that Dr. Mo is telling us to turn. Dr. Mo says turn left, we turn right. Or sorry, Dr. says turn right, we turn right. Dr. Mo says turn left, we turn left. Dr. Mo says turn right, we turn right. Dr. Mo says turn left, we turn left. That's what we're trying to do here. And so again, it's different. It's differentiated. It works, obviously. You guys wouldn't be sitting there listening to me rant every week if it didn't work. But the reason I wanted to pause on this slide and end on this is to remind investors that the reason we do what we do is because we ultimately have the humility to recognize that doing this is harder and tends to lead to worse results. And it's the only reason we've figured that out is because we had to go through the fire to realize that that is a less lucrative way to invest over the long term. And so I'll end on this with just investors broadly failed to predict the most important catalysts of each of the last 5 years. I'll slow down and say that again. Investors, 99.9% of you, me, us, all of us who are putting money to work in global capital markets failed to predict the most important macroeconomic development in each of the past 5 years. So in 2019, raise your hand if you predicted COVID-19 in 2020. None of you should have raised your hand. In 2020, at the beginning of 2020, or in March of 2020, did you predict that we would have a vaccine and stimulus fuel jump condition from the panic that you felt in March of 2020 to a booming economy in 2021? Nobody should have their hand raised. That's BS if you do. In 2021, did you predict a jump condition to a 40-year high in inflation in 2022? Maybe one or two of you did, but the reality is the 99.9% of investors did not, because we wouldn't have had such a hawkish repricing, sudden hawkish jump condition in the repricing of the forward rate curve if investors were broadly anticipating that. And obviously it wasn't priced into, short-term or long-term inflation expectations at the time. So clearly most people missed that as well. There's a lot of revisionist history, but what we're trying to do is I'm forcing all of us to be honest about this stuff. And because I think it's going to all help us become better investors. It might not help you make money over the next 2 or 3 weeks, but it'll certainly help you make money over the next 2 to 3 years if you become a better investor. So wrapping up, in 2022, when we were in the middle of a technical recession, how many of us forecasted a booming economy in 2023? I'll raise half of a hand. That's when we authored our Resilient U.S. Economy call, but we certainly didn't think it would boom in 2023. Then we started to see it boom, and then we started tweeting obnoxiously that it was booming. But I don't know that we forecasted that. It's just that we were able to observe that because we were responding to Bayesian observations in real time back then. But again, most people didn't forecast that. Obviously, we wouldn't have saw what we saw in terms of asset market performance in 2023, when most people were talking about recession. And then lastly, in 2023, last March, how many people thought in the middle of the deflationary regional banking crisis, in the middle of the weekend before, we got BTFP and everything else, and we were watching banks go one after another into the gutter, into the toilet. How many people in that moment thought we would have a boom in asset markets in 2024? How many people thought that? I mean, again, these are the most important things that happened over the past 5 years. And 99.9% of investors, including the ones that I'm talking to right now, did not predict any of them. And so this is why we do what we do, is because we understand that predicting the most important thing is hard, and predicting the things that are not even the most important things are even harder. And so, we just want to make sure that investors are aware that we are orthogonal. You tune into us every week because we do something different than what you're already doing. And we just want to say we thank you, we appreciate you, and we appreciate you putting up with my current lack of conviction, but it is what it is, and we'll hopefully resolve that soon. So we'll catch you back here next week.